Hello friends, welcome to my channel Financial Fitness with CA Ashima Abel Yunus and to the series on double taxation avoidance agreements. Double taxation is attracted when an NRI is liable to tax in the country of his residence on the worldwide income as well as in the source country on the income accruing or arising in that source country. To understand the basics of international taxation and double taxation avoidance agreements, please watch my previous video, which is part 1 of the series on DTAA. International double taxation refers to the taxation of foreign income in both the countries, one where the income is derived and the other where the investor resides. In this video, I'm going to explain how double taxation avoidance agreements, referred to as DTAAs, work and what are the different methods of claiming benefits of DTAA. So make sure you watch this video to the end. But before we begin, I would request you all to please subscribe to my YouTube channel. It's totally free. You can just log in on YouTube with your email ID and click on the subscribe icon. Share it with your family and friends. You can also share it in the WhatsApp groups in your phones. I will just take a quick pause for 5 seconds so you all can take time to click on the like icon, subscribe icon, and also click on the bell icon that you will find below the video. Please do that while I wait. Okay, so now I'll quickly introduce myself for my new viewers. Here I am, CA Ashima, a professionally qualified chartered accountant, a certified auditor, and a certified ERP implementation specialist specializing in tax, finance, and IT. I have worked as a partner and a director with one of the top 25 leading CA firms in India, which has also been a member firm of one of the big fours. After working in India for a period of 10 years, I moved to Sweden and have also worked as a senior financial consultant with a multinational and cater to clients in Sweden, Finland, Norway, Denmark, and the United Kingdom. I have also worked as a freelance financial consultant. So let's begin. As I explained in my previous video, which is part 1 of DTAA series, double taxation is a tax principle referring to income taxes paid twice on the same source of income. It can occur when income is taxed at both the corporate level and personal level. Double taxation also occurs in international trade or investment when the same income is taxed in two different countries. Double taxation on income is attracted on account of tax levied by the country in which that income is earned, which is commonly known as the source country, that is the country in which the income is earned. And if person who has earned the income is a resident of another country, then the tax is levied by home country, which is commonly known as the residence country. Let's understand this with the help of a simple example. Let's say an NRI becomes a resident of India and has a source of income in the US. That NRI is liable to pay tax on income in the source country, that is US, and also in the residence country, which is India. It works the other way around as well. For example, an NRI is resident of the US and has a source of income in India. The NRI is liable to pay tax on the income in the source country, which is India in this case, and also in the residence country, that is the US. Double taxation avoidance agreement is executed by two countries to mitigate the double or larger tax in the given situation and also to promote and foster economic trade and investment between the two countries. Currently, India has double taxation avoidance agreement treaties with a total of around 85 countries, and all these DTAA treaties are accessible on the Indian Income Tax portal. The benefit of DTAA, double taxation avoidance agreement, can be claimed by two methods. So there are two modes of eliminating double taxation through double taxation avoidance agreement. The first one is exemption method. In this method, the taxpayer does not have to take the home country income tax into consideration. Taxes can be paid in the foreign country or any one of the two countries. Taxpayers are exempt from paying tax in the home country in this method. However, the total tax on the aggregated income will have to be paid in the foreign country where the income arises. This encourages taxpayers to make cross-border investments in the home country without worrying about taxation. Countries that only use the exemption method to avoid double taxation are called tax havens, since foreign income is taxed at very low to nil rates. Some examples of such countries are the Cayman Islands, the Bahamas, and Cyprus. The second is the foreign tax credit method. As per this method, the taxpayer will have to take the aggregate income from the home country and the foreign country to compute the taxes. The taxpayers are supposed to pay the taxes in the country that they are residing in, regardless of where it arises from. The home country then allows a tax credit in that country after the tax has been paid in the country in which the revenue was paid. In this method, the tax paid in one country is balanced and offset against the tax liability that arises in another country. I applied this second method, which is the foreign tax credit method, in my personal example that I used in my previous video, which is part 1 of this DTAA series, to explain how double taxation avoidance agreements work, where I explained how I claimed my foreign tax credit for the taxes I paid in Sweden when I became a resident in India a couple of years ago. So friends, this was part 2 of the series on double taxation avoidance agreements. To know more about the advantages of DTAAs, double taxation avoidance agreement rates, documents required for claiming benefits of DTAA, and other FAQs on this subject, you can watch my next video, which will hopefully come up soon as a part 3 in this series on double taxation avoidance agreements. You can also watch my other videos where I have shared information about tax benefits for returning NRIs like RNOR tax status and other tax benefits for NRIs on sale of house property in India and many other videos related to financial planning and investments, which are not only relevant for NRIs but for all others as well. Now it's time to wrap up this video, and I hope you all will benefit with the information shared in this video, and I hope you like the contents of this video. I request you all to click on the like icon and please do subscribe right now. If you haven't done that yet, you just need to log in with your Gmail email ID on YouTube to subscribe. That's it. It's totally free for all. So do it right now. Subscribe, like, and share. Share it with your family and friends, and do share it in the WhatsApp groups in your phones. Thank you and bye-bye.